Good afternoon, it's Christian Thwaites of Brown Janikowski, Tuesday, April the 5th. So thinking back at the first quarter, it was quite a difficult quarter for markets. We wrote this up in our blog last week where we call it a torrid quarter, mostly because the markets went into almost free fall in the first 6 weeks of the year and then had a very sharp recovery from about February the 10th, 11th onwards. So we saw a sharp sort of V-shaped type of performance in most of the markets, and most were up by the end of the quarter with things like emerging markets, treasuries and tips markets, as well as small companies outpacing even the positive gain that we saw in the S&P. So good news there. A couple of quick things about the first quarter. First of all, as always, things that worked in the prior quarter tend not to work after that. We talked about the FANGs at the end of last quarter, and I've just put exhibit number 1, Amazon, which is down about 15% in the quarter, and at one point down 30%. So typically no momentum doesn't last very long. But the three big things that we saw for the quarter were, first of all, the European Central Bank and Bank of Japan. Both lowered their rates. That meant more people were coming into treasuries, and you can see it on the graph here. Treasuries had a nice upswing, you can see over on the right hand side. Secondly, energy continued to be a little bit disappointing. I think people were looking for more of a rally there. We didn't really see that, so that's continues to weigh down on the market. And thirdly, most people just misread the economy. I think most people were thinking that there was going to be a strong rebound after the Fed had increased rates in December. Turned out not to be the case at the end of the quarter, and as we speak today, growth is being revised down from about the 2% mark to about 0.6, so people misread that. Finally, let's just look at the charts over the long term, because while it's interesting to talk about the quarter, that's not what we invest in. No one really should be invested in these long-term assets based on one quarter. So over the 3 years, we can see that the S&P is ahead of some of these selective comparisons, up about 35%. Right behind that is European stocks, but as you can see, that thick reddish line has been trending down for a couple of years, and look what's right behind it. US Treasuries, one of the most safest and usually the most conservative investments, has done extremely well. And then on emerging markets, you can see that that really had a bad couple of years, but it's had a nice rebound in the last quarter, which we continue to like over the long term. So keep your eye on the long term. We certainly do here at Brown Janikowski, and we'll tune in at the end of next week. Bye-bye.